I guess the quick, overview of what Atomic is what we're building is in essence is a mobile app that allows for folks to earn a yield on their Bitcoin in a manner where they don't actually have to give away their private keys, right? So where they can make returns on their Bitcoin and they don't need to just deposit it into a black box. But before I get into that, I want to talk just briefly about like the why and why this is important, because I think that's very paramount. And I think a lot of people experienced this recently, which is last year we saw a lot of different financial tools out there for Bitcoin, or yield gaining opportunities out there for Bitcoin, the BlockFis, the Celsius of the world, where they were guaranteeing you 8% yield on your Bitcoin, but you had to deposit it into a black box. And so we were asking ourselves the question, why is it that after self-custody and cold storage or Lightning, why is the next thing, if you want to do anything finance related with your Bitcoin, and maybe it's just for hedging, right? If you're a business and you need to be able to hedge, or you want to be able to get access to stability or anything of that nature, the next thing is going to an exchange, right? You need to use FTX, you need to use, BitMEX, you need to use some type of exchange that's going to allow you to do that. And as we know, some of those aren't even around anymore. And so for us, we wanted to build financial tools for Bitcoin that were as transparent and verifiable as Bitcoin itself, in essence. And so that's really why we've been building Atomic, because we want it to be the one-stop shop for anyone to be able to access financial tools without having to give away custody, of their Bitcoin, and being able to hold on to their own keys. And really, our long-term vision for that is to allow for folks to do that in the easiest user experience as possible. So in order to do that, we use a type of contract that's called DLCs. And it basically allows for, any type of financial primitive, whether it's a futures contract, options contract, bets. It allows for all of these to be done right on the base layer of Bitcoin itself, which is very cool.
Yeah, that is very cool. You mentioned the phrase, being able to earn yield. And I think that's going to immediately raise some red flags from some of the listeners here. And just like how the idea of making a change to Bitcoin may have raised a lot of red flags in 2018, 2019. Talk to me about why this is something that Bitcoiners should be interested in or embracing, given some of the fallout in the last year or two that you alluded to.
Yeah, that's a great question. One, and I think the real consideration here is that all of the solutions that existed previously that allowed for you to earn yield, what they really involved was depositing your Bitcoin into a black box. And so for us, what we wanted to allow for folks to do is to do that in a transparent manner, where if you can deposit your Bitcoin into, a contract on top of, on the Bitcoin chain, right, a DLC, that you can verify exactly where it's locked for the duration of the entire contract, and exactly, what it's doing in the background, then that gives you a lot more transparency of exactly what's going on. So as an example, our current strategy, we offer a passive strategy that allows for people to be able to make a return using covered calls. So covered calls are a simple, options premium or options primitive that basically allows for, the basic idea of it is if you sell a call, it's like you're selling the ability for someone to, buy your Bitcoin at a certain price, right? So what this looks like is, say the price of Bitcoin today is $30,000. I might sell a call that expires this upcoming Friday at a strike price of $33,000. And if it goes above that, then obviously I might lose a portion of my Bitcoin. And if it stays below that, then I get the premium. But one of the really nice things of covered calls is that it doesn't matter. Like basically you either win in terms of Bitcoin terms or you win in dollar terms, right? And obviously we're trying to build this in a manner that's as but using math and backtesting and statistics to basically allow for folks a way to be able to very easily just deposit and invest in these type of strategies to earn a return where they know exactly what the risks are. So we're not saying if anyone's promising you, like, let's be honest, Kevin, if anyone's promising you a free lunch in Bitcoin, it's probably not true, and you're probably going to get wrecked and you're probably going to get rugged. And so what we try to be really clear on is, hey, what are the risks? What is the worst case scenario that can occur here? And what are the risks that you're taking on when using a product like this? And I think that's really the most important with any type of financial tool for Bitcoin, is it needs to outline the risks very transparently. And in general, it almost always needs to be non-custodial. Otherwise, the chances of getting rugs are very high.